Right, everyone, here we are with ticker symbol GNUS, Genius Brands International Inc. And before I jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. I hope everybody finds this video helpful and informative. And to all my subscribers, welcome back. So Genius was in a bearish trend, right? We had seen Genius for quite some time falling for the last couple of months after hitting highs of around $11. Then it leveled off. It peaked again up to closewards to $4 and some change. And it continued to dip, reaching new highs every other 2 weeks to a month. And then we were kind of just seeing Genius Brands hit newer lows and newer lows and newer lows as the weeks went on. And here we are in September, and one of the lowest points that it reached, and it touched it nearly 3 times, was 95 cents. And from that point forward, it had hit its bottom, and 95 cents is a very important number in the near future to see if this is going to hit newer lows, or that could have been the support of this recovery, and it reached highs of 135. It quickly dipped close to $1 again, and quickly after, the bulls reappeared, bringing this up at 149, close to 150. So we're going to see what is important for Monday and what is going on with Genius Brand. And there could be an opportunity here for investors looking for a good pick in the near future. I mean, Genius Brands was on its way to becoming debt free. At one point, I had heard that about a month ago or two, and they were finally launching in August their cartoon channel app, and they continue to bring out news, right, with other, how can you say it, other partnerships or collaborations with previous well-known kids shows, and they're kind of turning this into a whole new type of thing, and with no subscriptions. And they are making their cartoon channel on YouTube grow, and also their app, and no subscriptions, and they've become a debt-free company. They have tremendous actors also performing that are very well known as the voices of some of these cartoons. So Genius Brands is on its way to starting to focus on revenue. And their next specific earnings date is coming up on the 11th. So the 11th is really going to know of November. The 11th of November is really going to let us know if they became debt free and if they're on their way to starting to gain revenue. If this is a company that's actually going to start, you know, from the bottom and work its way up. And there's a lot of anticipation for investors because in December, there's going to be a lot of the toys of these characters being made, and they're like just trying to market this out there to all the young people so more people know about it. And then like they have an investor cartoon, right? So some of their cartoons are actually very educational. I mean, they have a whole plan. They have very broad and also big spectrum that they're trying to reach. They're trying to reach the education platform for kids, entertainment, bringing back old types of series, right? And characters, and bringing them back to life as new characters for their cartoons. So let's go ahead and see what is going on with Genius Brands. And this is one of those that is very risky because of what happened recently, that it reached $11 and it's been falling since, but it hasn't broken below $1 and stayed there for quite some time, because the moment it reaches $1 and stays below that, obviously this stock is on its way to probably getting delisted or having issues, obviously with the NASDAQ or the whole sector of allowing stocks to stay in the exchange, and they're going to want to stay above $1 for sure. If Genius Brands wants to get anywhere, they're going to want to stay above $1. And also, like I said, November 11th is going to be a game changer. So quarter two earnings was negative 488. If this actually rises or even turns positive, because according to what they said months ago, that Genius Brands is now debt free and they're innovating and stuff, then Genius Brands earnings, whatever it is that they earned, if they're debt free, they should be somewhere in the positive. So we're going to see how this changes for quarter 3 and then the upcoming quarter 4. It's going to be very, very interesting. We're going to definitely pay close attention, and that's coming up in about 2 months, almost a month and a half, actually. But let's go ahead and again see what's happening for Monday. And Genius Brands is one of those that is a risk penny stock and could actually grow with great potential, or it could just, go the other way. But right now, we're seeing the bulls reappear. They brought this to highs of 149. It quickly leveled off, and we're going to see what the bulls need to break through. So 50-day moving average is 114. But bulls want to stay above that. They closed off at 122. 114 is what the bears want to cross, and if they cross that, this is now in bearish territory and can start to hit newer lows. So 114 is where the bulls want to stay above, and that's what the bears want to anticipate to cross. Now, for the bears to even get closer to the 50-day moving average and cross it, they need to cross the support level, and our support level is 120, 2 cents away from the closing price. If 120 gets broken through, there is a small window between 114 and 120 to pay close attention to how the stock is reacting. Who is gaining control? Are the bears plummeting this one and bringing it down fairly quickly, or are the bulls trying to re-level it off and bring this back up from getting closer to the 50-day moving average in a downward direction, and instead the bulls reappear and pull it away in an upward direction? Now, if the bulls do accomplish that and the bears aren't able to cross the 50-day moving average, they were just able to break support and they bring it back up, their true goal is breaking through resistance, and that's 138. That is the first resistance level and the most important resistance level for this momentum to continue so that the bulls can continue to maintain control. They hit that resistance level one time after the high of 149, right? And it dipped, which was 30 minutes later, and they hit it again later in the day. So 138 is a very important resistance level that got rejected twice in the same day. The bulls need to break through that to continue to maintain control and momentum above the 50-day moving average in an upward direction. So 138 needs to be broken through, turn into support so that the bulls can continue to work their way up further away from the 50-day moving average in an upward direction. Very important. More important than the support, because in the support there's a window to pay close attention to and see how the stocks are behaving and how quickly is it moving down or is it slightly recovering. For the bulls to even continue to work their way up, they need to break through 138, the resistance level, and turn it into a support. As always, if you found this video helpful and informative, please click on the subscribe button, but don't forget to click on the bell. By turning on the bell, you turn on all notifications to not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button and let me know you watched this video. At the end of this video, there's going to be a pop-up video. It's a video that I do weekly. It's a series where I talk about the Federal Reserve pumping the market, and I go off of the S&P 500. The S&P 500 is the one I like to use. I know that there's the NASDAQ, there's the Dow, but the S&P 500 gives us an idea because there's blue chip stocks in there that are pretty steady and so forth, and companies that have been around for some time, as well as new innovative companies joining into the S&P 500 that give us an overall picture of the economy, right? It's not the only way to look at the economy, but it's one of the ways to know where it's heading and what is going on. In the S&P 500, it narrows down some of the 500 best companies in America. There's other great companies as well, but it narrows it down to 500 of them. And in those 500, as investors, you guys have to do your due diligence and research to choose a ticker symbol. And the way you do it is by looking at the behavior of the scheduled dates of the pumps and the individual stocks to see if they're reacting alike. And if they are, then obviously you would have to do your own rational decision based off of how you feel about the company and if you believe that the next Federal Reserve pump date is going to affect it in the same ways that it has before. So, as an investor, you have to do your due diligence and research. I'm not here to tell you guys to buy, sell, or hold. I'm just telling you one of the tricks that I've used in strategies while the market was going up and even now as it's been going down. So, check it out. You can make anywhere from 30 cents upwards to $3 per share. I'm not guaranteeing that you'll make those gains. It's not guaranteed. You have to do your research and due diligence. But if the S&P is going up 30 to 40 points on those dates, there are stocks going up 30 cents to $3 on those dates. So check out the video. I talk about it well more informed than this quick short explanation. Check it out. Hope you guys don't miss it because it's information a lot of investors are overlooking or don't even know about it. Take advantage of the great information that we have an opportunity to make profits. Thank you guys so much for watching, and let's make some money.